All right, 2025 is here, and we've had an interesting start to the year, to say the least. We've had a lot of jobs data that has come out over the past week. That is the main topic of the video here today. And the stock market has been up and down, but mostly down. So we're going to talk about why as well in this video here today. And last but not least, I got audited. So stay tuned until the end of the video about a little fun, personal story about Uncle Sam and audits. With that said, let's jump right into it. First of all, Happy New Year. This is my first market update video for 2025. So thank you so much for being with me here today. I'm very excited to be back. And with that said, before we get into it, please drop this video a like if you get value out of the video, subscribe to the channel, and leave me a comment. Let me know what you think. Let me know what else you want to see from me, and let me know if you have any feedback for me. Any feedback would be appreciated. All right, so jumping right into the data, we're going to cover every job data that you need to know about. JOLTS, the ISM report, the ADP report, and the actual jobs data that came out today as of the time of recording this video. By the time you watch it, it may be a couple days later. So first and foremost, the JOLTS data. This is job openings. So the expected number was 7.7 million. The actual number was 8.1 million. And these are US numbers. The only Canadian numbers that I'm going to talk about is in the final jobs data that I'm going to talk about. Now, these are November data. It's just because the JOLTS data is a little bit more laggy compared to the other reports and data that we have. But it's still the latest data that we have, and it was a beat. So that's a good thing, or you would think, for the stock market. Spoiler alert, it wasn't. The market ended up selling off, but we're going to talk about the reason why in a little bit. Then we've got the ISM report, which is the ISM is the Institute for Supply Management Services, and they come out with this report called it's an index, it's not really a report, it's the Purchasing Managers Index. This is just the best economical report for the manufacturing sector. So the expected number was 53. The actual number was 54.1. So again, another beat. That's good. It is below the high of 56 in October, but again, it's not too big of a deal. The next report that we're going to look at is the ADP report. And I like the ADP report more than this stuff because this is private employment numbers. And, I trust them a little bit more than these other numbers. But the ADP report was actually, we got a miss in the ADP report compared to the beat in these other data. Hiring has slowed in several industries. Employment in the manufacturing sector, has shrank for the third time in a row. Wage growth is at 4.6% as expected, which is the slowest pace of gains in July since July 2021. Now, this actually is a good thing. The reason being, in 2021, we had worries of a wage price spiral. What that is as inflation goes up, employees demand higher wages, and then they spend more money, and that creates more inflation in return. So obviously that's not a good thing, and hence the name wage price spiral. So 4.6 is a pretty good number. It's not too high, it's not too low. We obviously want to see people making more money at the end of the day, but we don't want them making too much money, So again, so far we've had some mixed numbers, some beats, some misses, some numbers as expected. So let's now take a look at what the jobs data that came out today was like. So the US numbers, the expectations were 153,000 jobs in December 2025. The actual number was 256,000. That was a beat. Unemployment rate at 4.1%. Canada's numbers, expectations was 25,000. Very, very low expectations. The actual number was 91,000. So that was a huge beat. And unemployment is at 6.7%, down 0.1% since November and below the expectations of 6.9%. Now, could this be seasonal? That's one thing. The other thing is that these are definitely not good numbers. 6.7% unemployment is not good at all by any means. And this could be seasonal. We're going to know based on the next few months of data that come out. If it was seasonal, then obviously we're going to start to see lower and lower numbers. But I actually am more optimistic than I've been over the past couple of months with the numbers that we've started to see and with the sentiment out there. The sentiment has started to get a little bit better. And, sentiment changes in the market very fast, especially in the stock market. And that's why the stock market goes up and down so much. The housing market obviously has a lot more lag to it, and it's a lot more consistent. So it's probably a good thing. You don't want the value of your house going down 10% up and down every day. So having said that, I do expect that these are gonna help the housing market in 2025 as long as we continue to get numbers like these. And that takes me to the aftermath and my predictions for 2025. So the stock market has been selling off. Now, the reason for this, even though we've been getting good data, is because now, as we're getting good employment data, the Fed is actually not expected to cut rates anymore until October. So that's going to be a long time without rate cuts. And as a result, the stock market has been selling off because the stock market goes up and down for a variety of reasons. One of the biggest being the interest rates. And the Fed now being expected to pause rate cuts, that's not good for the stock market. But in my opinion, that's a good thing. I've been buying a lot of stocks. Stay tuned for a video I'm going to make on my stock picks for 2025. So again, in my opinion, it's just a buying opportunity. I thought the Fed would kind of do what the Bank of Canada did and slash rates in 2024, but they didn't, and that's why the Canadian dollar has gotten hurt so much. And I know I talk about that a lot, but now at least the Bank of Canada is also expected to pause rate cuts, with no rate cuts expected in January, just based on the data that came out today. The meeting is on January 29th, and there's no meeting until March 12th. There's no meeting in February. So with the Bank of Canada pausing rates, I definitely like that. It might be a controversial opinion, especially as a realtor, but I don't mind it, especially because I believe we had too many rate cuts by the Bank of Canada in 2024, or it may have been enough, but it wasn't because, again, Bank of Canada is not thinking about the buyers and sellers in the housing market. They do think about that, but the reason they cut rates and the reason they were cutting rates so much in 2024 was because of the high unemployment numbers and bad jobs data. So the jobs data that we got, it helped out, and I hope that we continue seeing this trend, which will both avoid a recession and help the housing market and the overall economy in 2025. And now with the Fed, it's a completely different story. They did, I would say, too little rate cuts in 2024, and the stock market rallied regardless. And I think that staying higher for longer for the Fed might actually end up hurting the US economy and pushing them into a recession because they stay higher for longer. So we're going to have to see what happens. I do believe that if the US goes into a recession, we're going to go into a recession as well. So I certainly hope that both the Fed and the BOC can avoid a recession. It's not looking good in China and in Europe. So I hope that we can at least avoid it, because that would, at the end of the day, be what's best for everybody in terms of, people keeping their jobs, unemployment rates going down, and for sure the housing market will benefit. And I'm staying cautiously enthusiastic. I think that's always important, not to get too hyped and, too excited about things. But I think this is definitely a good thing. Last but not least, my update regarding the audit. So I got a letter and I'm getting audited. And it's so stupid because I kind of called it upon myself. There was just one letter that I didn't know that I had to file with my 2023 taxes that I did not file. And when I called the revenue agency to let them know about that, they told me that I would have to reassess my taxes. And I knew when they said reassess, probably gonna trigger an audit. But it's fine because I keep very detailed records. So I would recommend the same. And, kind of sometimes if you do keep good records, you think about, oh, like, what am I doing this for? But listen, there's a chance that you get audited. So keep good records. This may be your sign to be a little bit more diligent for filing taxes in 2024. Same for 2025. Stay diligent, keep all the receipts. And again, I'm glad I did. It's just a little bit annoying. It takes a little bit of time to put everything together, answer questions, so on and so forth. But that's a fun little personal update for you. Again, thank you so much for sticking with me in this video, and hopefully you found it valuable. If you did, please drop it a like, subscribe to the channel, hit the bell button, and leave me a comment. Let me know what else you want to see from me. And I hope, again, you enjoyed. I will see you in the next video. Thank you.